Alright guys, welcome. Thank you very much for joining me in this video. If you're new to this channel, my name is Mike. This is IPO Market Watch. I cover all the IPOs, but at the same time I also cover stocks already trading in the market and exchange traded funds and all sorts of things. I think you're going to like it, so you should subscribe to this channel, please, if you want to. Alright guys, in this video I am going to address a question. And the question came from one of the viewers, and they left a comment and they said, any dividend stocks that will be crash proof during market crashes? Now, don't think right away because you saw in the thumbnail TSLY and JEPI thinking that, okay, those are it. No. Yes and no, and maybe. I know it confuses you. The video is going to answer this question. I'm going to answer this question very well and to the best of my ability. But I am incorporating JEPI and I am incorporating TSLY because there is no one answer, in my opinion, to say that, okay, this is it, crash proof, get it. Because you know what, it just doesn't work like that in the markets. In my opinion, the greatest thing that you can do, guys, is have diversification. But when it comes to diversification in the dividend side, people are confused. And so I'm incorporating JEPI in the video. I will talk about TSLY, I will talk about YieldMax in general, and at the end of the video, I'm going to give you the formula to have the best dividend portfolio that can also be crash proof. And it will be crash proof, to be honest. All right, so we'll talk about that. So before I continue, guys, on Patreon, I have a community and it's called Bull Market Watch. If you want to join us, it is amazing. On Bull Market Watch, you have a ton of tools, a ton amazing tools, and I can say with confidence you're going to love the tools that there are. Tools like dark pool, hold, safety approvals, golden sweeps, insider trading, and a bunch of other things. Even if you don't know what they are and don't know how to use them, I will be there in the Discord every single day anyways, and you can ask me and I'll show you. In fact, I'm going to make some tutorial videos to explain that. But besides that, there's the $5 tier, there's the $10 tier, there's the $17.50, and they all have access to Discord minimum, right? You'll get that. But there's other goodies with each tier. If you want to get an idea, for example, just one part of the investment community is you can have access to what I buy and sell live and ahead of time, meaning that I will warn you and post live on Discord and on Patreon, etc. And I will tell, hey guys, I am going to buy that stock. I want to set a limit buy order for that stock, etc. You will know ahead of time what stock and when I sell it. And guess what? The results so far, 253 stock picks that I made have already been sold profitable. 42 open positions only so far, 9 for a loss. I think it's good. I think it's awesome, but more than good. So if you want to join us, the link will be in the comment section below, description of the video, or in the about page of this channel. So retirees, or in order to retire, or looking for building wealth, or looking for something crash proof when it comes to dividend portfolio. When you want to build dividends, guys, the best thing you can do, I'm going to say right off the bat, is diversification. Don't look at one specific ticker and say I'm going to run off with that. People right now are running off with one hot ticker that's paying every single month. But we'll address that also in this video and the dangers that some people just didn't realize. And I'm going to tell you something about TSLY that some people just didn't realize at all, in any way, shape, or form. I'm not saying TSLY is bad, but there is something you should know. Besides the TSLY part, we'll start off with JEPI. So we'll talk about JEPI, we'll talk about TSLY, and at the end of the video, I'm going to tell you what's crash proof as far as dividend investing. And I think you'll agree with me. One of the best things you can do is just to invest in a safe, cold covered strategy through JEPI. That's the ticker symbol, right? It pays a monthly dividend, and I'll show you the monthly dividends in a little bit. It's very good. But when people look at TSLY, they'll say, you know what, forget JEPI, I'm going to go with TSLY. One of the reasons why investors choose TSLY over JEPI is because of the share price, right? They say, okay, now TSLY is trading at $14.73, JEPI is trading at $55. I could get more shares with TSLY and get paid more dividends per month than JEPI. Yes, but it's also misleading, and there's an illusion behind all this, and we'll get to it. So JEPI, trading at $55.19, max lifetime chart you're seeing. Well, guys, this is actually built to give you 8 to 10% positive return over the long term, and I think that it will. And there's a reason why it's built like that, and it can do that. That is because they take a diversified portfolio of about 110 blue chip stocks screened for quality and earnings stability. And then they use a unique option strategy to generate income off of just 15% of that portfolio. But what about taxes? You're going to say, Mike, taxes can wipe out some portion of your dividends, because your dividend is income, and depending on where you are and what your tax rules are, which is different from if you're in Greece or if you're in the US, and within the US what state and so on. I think in New York and California, I think those should be the most expensive. New York for sure. Taxes, obviously, so when you make a dividend, obviously some of that dividend you got to put aside for taxes. And if we look at the dividends that JPI is paying, it's pretty awesome, right? So every single month, like I said, it's been paying. So let's just look at 2023, starting here February 1st, 44 cents. Then they paid 41, 44, 42 cents, 36 basically, and yeah, so around there, on an average of about 40 cents. But that's every single month. With that, ticker symbol JEPI is being something that you can more than say that it's actually better than any of the YieldMax ETFs, to be honest. I'll explain why it's better. Because it's built on good quality companies, and you can depend more on that your money that you put in will actually grow also over the years, and you get those nice dividends. The negative side is for someone who's not rich, they can't pay paying $55 per share to get JEPI and accumulate a lot of it so that they can have a really good monthly paying dividend. I get it, but I'll explain that also in a little bit, how that's actually wrong to think that way. So JPMorgan and Chase, guys, YieldMax, a diversified portfolio of YieldMax ETFs is up 6% this year versus JEPI's 5%. Let's read that again, guys. A diversified portfolio basically of YieldMax, basically meaning everything that YieldMax is coming out with so far. They have NVIDIA, they have TSLY, they have TSLY, and a bunch of other things that they have. Different types of dividend paying ETFs that they have come out and they're giving the retail investors to buy. If you put them all together, a diversified portfolio of all the YieldMax ETFs, guys, it's up 6% this year versus JEPI alone, 5%. Now you're going to say, well, I'll take that, 6%. Like I said, though, that was a diversified portfolio. But guess what? The YieldMax ETFs, they come with 7 times the volatility, and they come with 9 times worse peak declines than JEPI. So at the end of the day, having just investing all your money on just 1 or 2 or 3, well, it would be better to diversify. If you're going to go just with YieldMax, fine, diversify. But if you were to put in all your money on TSLY, it's really not a good idea. TSLY is getting lucky right now. All right, TSLY is getting lucky this year, and it is a good thing. I'm not saying that I would like to have TSLY in my portfolio also, but to go all out on just TSLY is very bad, because this is the red line is 2022 for the Tesla stock. You're looking at the Tesla stock, and TSLY is dependent on Tesla alone. And so this is the red line for how the Tesla stock has gone in 2022. Look at the yellow line, which is 2023. So far in 2023, TSLY, the dividend paying monthly ETF, is paying good money, and people are very excited about it. But that's because Tesla in 2023 is doing very well. If you had bought TSLY in 2022, you would have been destroyed. And you would not have had the dividends that it pays now. The TSLY dividends, the dividends you're seeing from TSLY this year, you wouldn't have had those if you were in TSLY in 2022, which TSLY did not exist in 2022. The point so far is, guys, if we just put our money on just TSLY, we're not having a dividend paying portfolio that's crash proof. It's not, right? At some point, Tesla is bound to go down. But then again, someone's going to say, and they're right, that Tesla is not just an automaker, Mike, and they're evolving and they're becoming something really, really big. And right now it's at $274, and Tesla can go much higher. It can go to $400, $500, maybe $1,000. You're right. So that's why I'm saying that, yes, I want TSLY also in my portfolio, but I would not go all out on TSLY. I would also add JEPI. But are those two, JEPI and TSLY, enough to say that, hey, I got it, this is a dividend paying market crash proof portfolio, just those two, although they're great. No, I need those two for sure, but I need something else also. So the YieldMax Tesla Option Income Strategy ETF, TSLY, you're looking at the max lifetime chart of it in 2023 because it came out in 2023. Like I said, look at how it's done. Your initial investment in it, if you had bought on the beginning and held till now, would have been negative, but good dividends. Imagine if this existed in 2022. If it's doing like that now, when Tesla is going up this year to date, Tesla is up, and this is the result from TSLY, right? Imagine what it would have been in 2022. It would have been horrible. All right, so let's move on. TSLY, the monthly paying dividends that it gives are far out exceed what JEPI does. They're amazing, right? They start off with 99 cents, 90 cents, 90 cents, 82. They had 44 cents in May 5th, 80 cents, $1.06, 83, and 58 cents now for September 8, 2023. So is it really a 74% yield distribution from TSLY? No, it's not at all in any way, shape, or form. And it would have been far worse in 2022. This is from YieldMax, what I'm going to read to you right now. For 2023, in regards to TSLY and how it's performing, with it obviously being dependent on Tesla. Even though it's not 74% distribution rate, it hasn't done that. All right, so it's actually near like 50%. But this distribution rates caused by unusually favorable market conditions may not be sustainable. They're saying that about TSLY right now this year. Such conditions may not continue to exist, and there should be no expectation that this performance may be repeated in the future. And YieldMax goes on to tell us one more thing. The distribution may include a combination of ordinary dividends, capital gain, return of investor capital, which may decrease a fund's NAV, right? And trading price over time. As a result, an investor may suffer significant losses in their investment of TSLY. And you know what? Why don't we add Apply? Apply is based on Apple, and it's from YieldMax. But I think that if we were to look at 5 years, for example, Apply would probably perform more stable than TSLY, but TSLY being dependent on Tesla, which can be a very volatile stock. Elon Musk himself is very volatile, and you never know what great or bad things he might come up with that actually might perform well if Tesla continues to innovate. Morgan Stanley's Adam Jonas, right? Adam Jonas raising his price target for Tesla to $400, citing the transformative potential of Tesla's custom supercomputer, which could significantly expand the company's enterprise value and find applications beyond the automotive sector. What is a dividend paying ETF stock that can be market crash proof? There isn't one. It's called diversification. That's what it is. People don't like to listen to that maybe, but that's what it is. If you diversify your dividend paying portfolio, you're going to be market crash proof, and you're going to do amazing over the long term, I guarantee you. Because when something goes bad, the rest do well. Can't everything, you're not going to, if you diversify right, not all of those would go down together at the same time. It's impossible. In fact, you're only going to gain over the years. So yeah, get TSLY, get JEPI, get FDVV, get Apply, get nice stocks. There's some really good stocks, obviously companies that are paying really good dividends. I've talked about some of these in my Discord. In the 1750 tier, we've already covered some, and they're doing awesome. So there's a lot of other things, but if you incorporated all the good things in one portfolio, guys, that is your market crash portfolio dividends that will succeed, and at the same time you'll build wealth, because not only about the dividends, don't just look at the dividends, you want the money that you're pouring in to also grow. Why not? Don't you want that to grow too? So that's that. Thank you very much for watching this video, and I hope that you have a great trading week. Take care, everyone.